Hey traders, checking in on the stock market today. Bulls following through after confirming the trend changes in their favor last week. It has been the financial sector leading the way to the upside, but today the tech bulls stood out. I'll go over some swing trades that played out really well over the weekend, one of my better swing trading days in a long time, and I'll show you where I expect there to be solid volatility all week for short-term day trades. So I once again want to make the important distinction between the futures charts and SPY, because today, yet again, I get more information from the futures chart, and I'll give the example. So we headed into this morning, and I'm doing my pre-market prep, and I see the 4-hour consolidation, and I say that is a bull flag if the 4-hour EMA 12 support continues to hold. So that is my guide on the morning. If that support holds, the bulls keep complete control. If I were only looking at SPY, we would have opened at the low of Friday and broken it to start daily consolidation. I probably would have had a more bearish lean looking red on the day if I were only looking at SPY. If you look at the S&P 500 futures chart, we did not break the low of Friday. Daily consolidation is not underway. So again, just finding a lot more clarity in the futures charts ever since this volatility started on this consolidation. So the daily trend change following through, every step forward we take is another step closer to the all-time high and further away from our recent low. So bulls are extremely strong, and we are less than 2% from an all-time high right now. That 4-hour support and low of this morning is now our clear short-term guide. If that level holds, the 4-hour uptrend remains intact, and we're not going to see daily consolidation. If we lose the 4-hour uptrend, we will see daily consolidation. So that's what I'm watching now for the rest of this week. There is an uptrending resistance line to be keeping an eye on. We're right there right now, but that's about it. Otherwise, just watching the 4-hour uptrend and our limited resistances. There is one level we're testing right now, 44.86. You can see these levels right here, a bunch of tops. But after that, we're looking back up at the all-time high. And as far as SPY is concerned, resistance is going to be 448.41, and then we're looking up to the 450s. NASDAQ, same deal. 4-hour EMA 12 support, bull flag with a big breakout. That's a lot of follow through. So we have our higher low as our guide on the uptrend, and we're playing catch up. SPY has been leading the NASDAQ on this daily trend change and bounce follow through because XLF has been leading the way. Today that changed, so the NASDAQ gained ground on SPY. The healthcare sector was easily the lead bear sector, and the XLF, we closed flat in XLF. So the fact that QQQ was up 1%, the NASDAQ plays significant catch up. So now we're looking at the earnings report. We've got Netflix, Tesla, a couple names this week, but really it's next week where it's going to be prime time with the bigger players in the tech sector, which will help determine whether we're going to set a weekly lower high or head right back to the all-time highs. And if we're looking at QQQ, daily time frame, resistance 374.04 is being tested, and we've got a lot of space to maintain a daily higher low next time we consolidate. The financial sector getting a little bit toppy. We can see the high, the all-time high from Friday, 39.71. We broke it, but only by a few pennies. So whenever that happens, and just keep an eye out, because what happened the last time, we had the all-time high, we broke it without much follow-through, and that led to daily consolidation. So if we see a bear break of 39.32 tomorrow, daily consolidation is then underway. We're looking for a gap fill 38.94, and then we'll scout a daily higher low with a lot of space, anything above 38.41. So still a daily uptrend, but lacking some follow-through. Just seeing a pattern I want to look at real quick. 4-hour time frame, extended hours turned off for a little bit of clarity. Keeping an eye on that if daily consolidation starts. Potentially a little rising wedge, but we would need a red day tomorrow. XLV, easily our lead bear major sector. It is a weekly bear flag at this point. It's up to the bulls to prove to us that it is not a weekly bear flag, but we have a confirmed daily trend change straight into daily consolidation with no follow through. So if we're going to get some proof, we must hold 124.77 and break 128.55 with follow through. And because of that, or I should say in conjunction with that weakness in the healthcare sector, look at the biotech sector. It was bouncing weak initially, potential daily bear flag, got a little bit more follow through, but the last 2 days, a lot of red and some solid bear volume. We would have to hold 121.76 and break 128.28 to shift this momentum. We're right back down to the recent low. The biotech sector bulls are still struggling. And if 121.76 breaks, it's the double bottom at 118 back in play. So again, a slow grind up. This is 6 days of bounce and giving back the majority of it with 2 days of pullback. So one of our lead bear sectors with the healthcare sector, IWM, looking for a daily higher low, anything above 219.83. And again, we can draw a downtrending resistance line here that we rejected from. I would draw it right like that. I would actually do my anchor point a little differently, but still rejecting from that resistance. We have an uptrend support line that is still holding. So still tightening up. We did break price levels, but not convincingly. If we can get over 229.84, that's a convincing bull break of this pattern for me. And as long as we hold 219.83, we remain in higher lows. So still watching very closely because again, we're expecting volatility in IWM. Why? Because we've had 6 months of sideways. Look at this range, 1 month candle. Set the all-time high, and we have traded within this 1 month for the last 6.5 months. So 6.5 months with the same range as 1 month, which tells us things are going to tighten and then break with follow through, most likely. Solar sector still really strong, daily bull flag, inside bar bear break with 0 follow through. And if the bulls can get over 88.82, very convincing. And then from there, it is 93.49. And if we can get over that level, it'll be the highest price in 6+ months. So key resistance test and definitely our strongest growth sector. Checking in on commodities and the dollar. So the dollar is shaping up for the potential to see weekly consolidation begin. We have not seen weekly consolidation in 5 weeks. If we confirm this daily downtrend by breaking 93.75 with a lower high and lower low, weekly consolidation is underway, and we then scout a weekly higher low with plenty of space for it to form. We have this daily uptrending resistance line we're watching. And this daily uptrending support line. And we would be watching, if this is tested, the bulls would want to set a weekly higher low off of this uptrending support. But watching closely because the commodities certainly being impacted. Gold, weekly time frame has the most clarity for me. And that just reminds me that we can chop around for a while as long as we're within this tightening daily range. Anything under 1834 is a lower high on this move. And it's possible that we remain tight for another month plus. So the weekly lower high is not set yet. It's a weekly inside bar. We are still in a daily uptrend, but it was a big time pullback to end last week. Still a daily uptrend. So here's our higher low, and bulls are trying for another higher low. And the last thing the bulls want to see is set a daily higher low and then confirm a daily downtrend because that would set our weekly lower high. And we would then be looking back down towards 1721 support. Silver is gaining significant ground against gold the last 2 days, just by going sideways with slight pullback. And if we're looking at the XAU-XAG chart, which shows us who's stronger, gold or silver, this bear break to end last week means that silver is the strongest it's been compared to gold in the last month. So silver trying to set a daily higher low, anything above 22.34. And again, much healthier consolidation. The miners are more like silver. Daily bull flag possible here. Inside bar, if it breaks bull, our daily higher low is 31.88. 33.52 is a very key weekly lower high resistance level. And it's just a question of, do we consolidate with another weekly lower high for potential inverse head and shoulders? Or can we break that resistance level without losing the daily higher lows? So miners continuing to show some relative strength comparative to gold. Oil using the December futures contract now as the volume rolled over to it. Bearish reversal candle on the daily Anything above 78 is just a higher low. Starting to keep an eye out for weekly consolidation in oil. And there's a number of reasons. XLE, getting tired. Bulls breaking resistance straight into a little pullback and just not seeing follow through. The weekly time frame has been setting a higher low significantly for the last couple weeks, last month I should say. But that's just one little factor. The other factor, natural gas has rolled over. Clear daily downtrend confirmed. The weekly big upper wicks told us to be cautious bullish after such a magnificent run. The RSI levels on the weekly time frame were at historical pullback levels. And on the monthly, it's the highest monthly RSI in 15 plus years. So we're topping out. We're now zooming out and looking for a weekly higher low, anything above 473. If we get to weekly EMA 12 support in the low 480s in 4-hour oversold conditions, bulls are going to be scouting for a potential bounce. Just keep in mind, we are losing momentum on the daily, now in a clear daily downtrend. So next time we do bounce, anything under 593 is just a daily lower high. So the notable momentum shift and clue number one was this bull break straight into a big pullback. Go back and watch the October 6th, October 7th video and watch the change in tone, starting to be real cautious once that took place. But pullback in natural gas is another reason why I'm watching for oil to see some weekly consolidation. Still, bears have a ton of proving to do, but certainly not looking long up at these levels at this point. So some swing trades. So you know I've been in AMC with the beautiful setup for a weekly higher low, inside bar, daily equilibrium, broke bull. I exited the last of my position today, and that was just because my targets had been exceeded. I was looking for this resistance test of upper 41s to be my exit for the swing trade, and I exited in the 43.20s today. There is a gap to fill at 44.20, and the bulls do still have complete short-term control. So we can definitely see another leg up, but it was just me being in more swing trades than I'm used to and just locking it in. And now I wait for the weekly lower high, anything under 52.79, and I will be watching for a weekly equilibrium to break sometime before the end of the year. So bulls aren't done yet necessarily. They're certainly still keeping some strength, but I'm done with the bulls for now. Nice win from 36s. Again, I was scaling out on the way up, but a big win. Otherwise, Friday I grabbed a couple more swing positions. The first was NIO. Why NIO? Big picture first. We're watching for a monthly higher low compared to 30.71. Again, it's the same process as to why I entered AMC. Longer term time frame, most likely scenario. Zoom into the shorter term time frame and get the details that show you, yes, that longer term scenario is shaping up. So what do we need for a potential monthly higher low to be forming? We need a daily trend change to the bulls. Okay, let's look for one. Significant bounce. Look at this resistance zone, 37.03, 36.86. And I'm sure I talked about this last week. I forget what I say publicly and what I say on the live streams, but we had a zone of resistance, 36.60s to 37.03, tons of tops. But it was a little inverse head and shoulders setup where we had, you could call this the left neckline, there's our head, here's our right neckline, and I was looking for a bull break of 36.68, and then 37.03 needed to break for follow through. So we gapped up on Friday. And normally I would say, oh man, that's not the setup I want. And I did Friday morning. But the bulls gave us a chance for an entry because we popped Friday morning and then we had a support level to play off of. Let's go to the 1 minute time frame because that's what I was watching. I was actually watching the 2 minute, but I knew what was going on the 1 minute. Pop first thing. We've broken all the resistance levels that I need to break to confirm the daily trend change and try and shape up a monthly higher low. We then drop notably and test the low of the day. We hold the low of the day by 2 pennies. We then hold the low of the day by 4 pennies. That's a bottom fishing play. Great, I'm in. I'll exit if we hit a new low of the day with some wiggle room. So it's all about risk to reward. And with that trade entry, if I stop out, I have an acceptable loss and bulls do not follow through on the gap up and we fade. If I don't stop out, bulls followed through on the daily trend change. And fortunately, the 1 minute equilibrium broke bull, and the bulls ran with it from there. So I got a really nice entry in the low 37s. I exited 3/4 of the position on Friday, and then exited the rest today in the 39.50s. And that's just because things are extended. And again, I like approaching the day with a fresh, clean slate and a day trader's mindset. I am practicing to be better at swing trading because that's always something I want to improve for when I'm not sitting on the computer every day trading. But there's a gap to fill at 40.59. The bulls still have full short-term control, but again, just exceeding my targets. And when I looked at my swings, I had 3 different swings in 3 different sectors, all up 5% today. And for me, that means take some profit. So I'll still be watching NIO. Maybe I'll look to re-enter on hourly consolidation. Maybe I'll wait for daily consolidation. The other one was CCJ. So CCJ is a uranium play. Cup and handle. Resistance. Pulled back. Tried to get over resistance. We failed. Bull flag. So I saw the inside bar bear break on Friday with 0 follow through. What we did on Friday is broke the inside bar bearish. Look at the dip buying that we've seen on this name. Thursday morning, V-shaped dip buying. Friday, break the inside bar bear, V-shape. So I entered on 5-minute consolidation, put my stop under the low, because if that low holds, it's a daily bull flag. If it's a daily bull flag, it's a daily cup and handle. I just watched AFRM give us a little daily cup and handle. I just watched MARA, crypto miner stock, give us a daily cup and handle. So I'm definitely going to play this one. And swung the position. What would I have done if we kept consolidating on the daily? Well, if we broke the low of Friday, as long as we saw no follow through straight into a bounce, I would have entered a second position and then placed a stop loss based on dollar risk I would be willing to take. Fortunately, we gapped up and I didn't have to do anything except lock in profit. So big upper wick, not ideal. The hourly consolidation was more than the bulls wanted to see. And we have to be cautious of an hourly lower high being the result of the next bounce. But from an entry in the 26.50s or so, big time move up. And I exited half at 26.80s or so on the initial morning push. And I will exit the rest if we lose the hourly uptrend from here, because it would definitely be a red flag to break out bull straight into daily consolidation. So some nice swing wins. Looking to get back into day trading, and the names that I'm going to be looking to day trade are uranium names. CCJ, UUUU is another one. Cup and handle bull break, not a lot of follow through, but we may get some. So those names have solid volatility, and I've been tracking CCJ. Again, I don't ever want to just jump headfirst into a new ticker. I've been watching CCJ trade now at this point on a daily basis this entire time. Back here, it was new to me. I was just learning about it and learning about the opportunity in uranium as people in the chat room with way more knowledge than me about the sector were talking about it. So I have to observe and get comfortable and watch the bid and ask spread and watch the volume. And then I can start trading it more and more. You have to date the ticker before you can marry it. So now I'm looking at the crypto miners to have a ton of volatility this week. Bitcoin is either going to give us an all-time high or convincingly reject from an all-time high into potential weekly consolidation. MARA did the same cup and handle. Resistance, came up, failed resistance, bull flag, big breakout. So I don't care what direction I'm going to be trading these names in. And it's MARA, it's HUT. HUT has a double top at its all-time high today. So certainly watching that one close if we can get over the all-time high. Coin, huge day today. Look at the volume ramping up. There's hype entering the crypto stocks as Bitcoin is hovering under its all-time high. And it's notable that a name like MARA has gone up 3,500%, while Bitcoin's gone up 550% in the last 13 months. So there is tons of volatility here in both directions. Even just this hourly pullback from the high of the day, 53.42 to the low, that's a 5% pullback. So as a day trader, I know that uranium and crypto stocks will give me all the volatility I need this week. I have no idea what direction I'll be trading crypto miners in tomorrow. Bitcoin's currently in a 2-hour equilibrium that will likely break before the open tomorrow to give me that information. I hope you had a good start to your week and a good weekend. Appreciate you watching. Don't forget to do good things. Check out, we put out a trader talk with Devin over the weekend. If you haven't seen that, check it out. It's on our YouTube channel on a new playlist with our trader chats. And we will see you soon.